Have you ever thought you could lose your entire life savings because of a single email, and that it could happen so fast you would not even have time to call your own child? Not an obvious link, not sloppy spelling mistakes, not a stranger who sounds suspicious, just a bank alert that looks so perfect it feels more real than the legitimate emails you have received for years. This story begins on an ordinary morning in the United Kingdom when a 64-year-old woman opens her inbox and sees a subject line that makes her heart pause. Your account shows signs of unauthorized access. Act immediately to protect your funds. The email carries a familiar logo, familiar colors, the exact tone banks use, and even a verification button that looks identical to one she has clicked dozens of times before. In that moment, the most dangerous thing is not greed. The most dangerous thing is fear and the instinct to fix a problem quickly before it becomes irreversible. In 7 minutes, she does everything a careful person would do when they believe they are facing risk. She reads closely, she follows each step, she believes she is stopping a theft. In reality, every action becomes a door she opens herself. My name is Dolan. On Financial Secrets, I do not tell stories to make you panic. I tell them to help you recognize a cold pattern that regulators have warned about repeatedly in recent years. Impersonation scams, especially those pretending to be financial institutions, are rising sharply because they rely on trust and urgency, not ignorance or carelessness. Now, I want you to imagine a countdown clock. 7 minutes, no shouting, no threats. Just an email that looks almost impossible to distinguish from the real thing. And when the 7th minute ends, her financial life changes forever. Her name is Margaret. She is 64 years old and has been retired for several years after more than 3 decades of steady work and disciplined saving. Most of the money in her bank account represents the years she planned to live on, with a small portion meant for her family. Margaret does not chase high returns. She does not invest aggressively. To her, the bank has always been the safest place to store her future. The email arrives on a normal weekday morning during business hours, not late at night, not when she is rushed or exhausted. The subject line is serious, professional, and unmistakably bank-like. There is no threat, no extreme language, just enough urgency to activate the instincts of someone who believes prevention is always better than repair. Margaret opens the email and reads slowly. The logo is correct, the colors are correct, the layout matches previous messages she has received. There are no spelling errors, no unnecessary details. Everything reinforces one single thought. This is my bank. When she clicks the link, the website looks nearly flawless. The address appears right, the interface is right, the security language is identical to phrases her bank has used before. Margaret does not feel like she is taking a risk. She feels like she is doing what must be done to stop a potential threat. No one pressures her. There is no countdown timer on the screen. But inside her mind, time begins to move faster. Each step carries the thought that stopping could make things worse. So she continues, calm, compliant, confident that she is still in control. What Margaret does not know is that this entire experience has been designed to feel perfectly safe, not to steal money immediately, but to build trust. And once trust is deep enough, 7 minutes is more than enough. Everything begins with an email that looks completely ordinary. No drama, no obvious bait. The subject line simply states that Margaret's account has shown unusual activity and needs verification to remain secure. It is not a threatening message. It resembles the kind of responsible notification any bank might send. The timing makes it even more believable. Business hours, a normal workday. Nothing about it triggers heightened suspicion. Margaret does not think she is being targeted. She believes this is a small issue that needs quick attention. The danger lies in the fact that it does not ask her to do anything reckless. It only asks her to verify. When Margaret clicks the link, she does not enter unfamiliar territory. She enters something deeply familiar. The website mirrors her bank almost perfectly. Familiar colors, familiar layout, familiar security language she has seen for years. There is no request to transfer money, no promise of reward, no extra detail that raises concern. Everything is designed to deliver one message: you are in the right place, you are doing the right thing. Trust is not built in a single moment, it is built through consistency. When every detail matches memory and habit, the brain lowers its defenses automatically. Margaret does not trust because she wants to. She trusts because nothing suggests she should not. To her, this is simply the bank doing its job, and she is doing hers. Once she believes she is dealing directly with her bank, the next actions feel logical. Margaret follows the verification steps. She enters information. She confirms her identity. She checks carefully for mistakes. In her mind, this is how she prevents a bigger problem. She does not feel like she is giving away something dangerous. She feels like she is strengthening security. At that moment, nothing appears wrong. No money leaves the account. No suspicious alerts appear. That silence becomes the strongest reassurance of all. Margaret believes the issue is resolved. She feels relief, confident she acted in time. What she cannot see is that on the other side, what she calls verification is being used to grant deeper access. Not through force, not through crude deception, but through her full, voluntary cooperation. There are brief moments of hesitation. A page loads slightly slower than expected. An extra confirmation step appears. But these details are too small to break the sense of safety already established. When people trust a familiar system, they tend to explain minor irregularities away. Margaret tells herself that security procedures change and a major bank cannot make serious mistakes. That fleeting doubt fades. And in that exact moment, when vigilance softens because everything feels reasonable, risk becomes irreversible. When the money starts leaving the account, there is no loud alarm, no sudden shock. Small transactions appear quietly, designed not to trigger automated warnings. By the time Margaret logs in again and realizes something is wrong, most of her life savings are already gone. What happened to Margaret is not rare. Official reports from UK Action Fraud show that bank impersonation scams via email and text are among the most financially damaging crimes in the country, with victim numbers rising each year. In the United States, the Federal Trade Commission reports the same trend, with bank impersonation scams ranking among the fastest growing forms of fraud, particularly targeting middle-aged and retired individuals. The common factor is not carelessness, it is trust. When a scam looks real enough, financial knowledge is no longer a shield. What is exploited is not greed, but the habit of trusting what feels familiar and reasonable. Margaret is not an exception. She is a textbook example of a model repeating at massive scale, where people who do everything right can still lose everything in minutes. Margaret realizes something is wrong when she logs into her account for the second time that day. There is no red alert, no emergency message, just a number that does not match her memory. A familiar amount is missing, not large, but enough to make her stop and stare. Her first reaction is not panic, it is denial. She tells herself the system might be updating, a transaction might still be pending. She logs out and back in. The number does not change. She checks the transaction history. Names she does not recognize appear. The timestamps are recent, too recent. Her heartbeat changes slowly, becoming heavy rather than fast. Margaret calls her bank using the number she has saved for years. While waiting, she reopens the original email. Now details begin to look different. The sender address, a single misplaced character, a link she did not examine closely enough. When the bank representative confirms that no security alert was ever sent from their system, everything freezes. There is no scream, no immediate tears, just a vast emptiness. A moment when she understands that the steps she took to protect her money are exactly what caused her to lose it. Questions rush in, but none of them help. Why did I not stop? Why did I not call first? Why did I trust so quickly? But there is no rewind. The transactions are complete. The money has left the system. There is no undo button for those 7 minutes. The worst feeling is not the loss of money. It is the feeling of being betrayed by her own caution. Margaret did everything she believed was safe. She was not reckless, not greedy, not careless. And that is what makes the shock so deep. When someone believes they did everything right and still fails, the psychological foundation collapses fast. When the call ends, the room feels unbearably quiet. Margaret sits still, staring at a dark screen. In that moment, she is not thinking about the missing number. She is thinking about decades of saving, plans for retirement, the sense of security she believed she had built, gone in a single morning. This is the point of no return. No doubt remains, no assumptions, only the raw truth that a system designed to protect users has been copied well enough to defeat the people who trust it most. The days that follow move more slowly than usual. Margaret does what must be done mechanically. She works with the bank, files, reports, answers the same questions again and again about timing, emails, and actions. Each retelling does not reduce the pain. It sharpens it, as if the story has stopped belonging to her and become a case file. The bank explains procedures, responsibilities, limits on reimbursement when transactions are authorized by the customer. Everything is correct by policy. None of it touches the real loss. Margaret understands this is not a technical error. It is a gap the system cannot close once trust has been exploited. At home, consequences appear quietly. Plans are postponed. Spending becomes cautious, not because she is suddenly poor, but because the feeling of safety is gone. When psychological foundations collapse, every financial decision feels heavier. The hardest part is not explaining it to others. It is explaining it to herself. Margaret returns again and again to those 7 minutes, not to find the criminal, but to find her own mistake. She wonders if stopping at any point could have changed the outcome. Slowly, another realization forms. Not sharp, not immediate, but strong enough to reshape how she sees the story. This was not a personal failure. It was the result of a system designed to target people who do everything right. People who trust systems, people who follow rules, people who never think they are targets. Calm returns gradually, not as blind trust, but as deliberate caution. Margaret no longer believes financial safety comes from following instructions automatically. She starts asking questions. She starts pausing, not from fear, but from understanding that in modern finance, speed itself is the greatest risk. Her story does not end with recovered money. It ends with regained awareness. Not a perfect victory, but the first step towards stability again. The lesson from Margaret's story is not a technical trick or a simple red flag. It lies in how modern scams have changed in nature. They no longer rely on ignorance. They rely on normal behavior. When a scam is designed to look exactly like protection, the line between safety and danger disappears. The first rule is urgency disguised as responsibility. The most effective messages do not cause panic. They make you feel you are doing the right thing. When the brain believes an action is ethical and reasonable, natural defenses shut down. The second rule is familiarity builds trust faster than understanding. Correct logos, correct language, correct experience. When everything matches habit and memory, people skip independent verification, not from laziness, but from confidence. The third rule is voluntary cooperation is more dangerous than force. In bank impersonation scams, victims are not pushed into wrongdoing. They are guided into doing everything themselves. This is why reimbursement is difficult and guilt is heavier, even when blame does not belong to them. The most important lesson is that financial safety today comes not from reacting fast, but from stopping at the right moment. Any message that demands immediate action involving money requires independent verification through channels you choose, not those provided to you. Margaret's story reveals a hard truth. You can do everything right and still face risk. But understanding how these risks work dramatically reduces the chance of becoming the next victim. If there is one habit to take away from this story, it is the habit of pausing. Not pausing out of fear, but pausing to confirm control. In modern finance, speed is no longer the consumer's advantage. It is the attacker's. Any email or message about your bank account, no matter how familiar it looks, should never be the place where you begin action. Start from a channel you choose, your official app, a number you saved yourself, a call you initiate. That single separation can mean the difference between safety and irreversible loss. If you have older family members, especially parents or retirees, share this story with them, not to scare them, but to give them a new framework. That following procedures is sometimes not enough. That pausing to verify is not inconvenience, but a modern financial survival skill. And if you ever believe scams like this only happen to others, remember Margaret, she was not careless, not ignorant, not greedy. She simply trusted a system that looked perfect. On Financial Secrets, we do not tell stories to make you suspicious of everything. We tell them to help you see where to slow down, where to regain control, and where trust must be placed carefully. If this story made you think, hold on to that feeling. It is the most important layer of protection no bank can provide for you.